had after the 100-point recovery that we had early on in the session. So second half of the day has all been down and down, making lower lows. Aditya Sood is with us, portfolio manager at InCred Portfolio Management Services. Aditya, good to have you with us here. Thank you very much for your time. Would you be a buyer of HDFC and HDFC Bank? Would you treat these 5.5% falls as opportunities?
Yeah, so HDFC Limited, I think so. We have been holding the stock for close to 3.5 years now. Our belief is that, when you get a sectoral headwind in the sector, leaders who are gaining market share need to be bought into, and valuations are very, very attractive. So if you look at valuation vis-a-vis the previous cycle, obviously it was a much higher ROA business. The merged entity benefits are known, I think so, to multiple people. There are enough low-hanging fruits in terms of, obviously it is going to be a big part of the index as well. So we see this as a temporary blip in the share price. Obviously, it is a very, very strong franchise. It will continue to gain market share structurally. So we are structurally very positive on the mortgage business. That includes both large and small mortgage companies.
All right. Hi, Aditya. Good afternoon. Thanks so much for joining in. Aditya, when you send in some inputs, I want to understand stocks that can double or triple, say, in the next 5 to around 7 years. Or it has the stocks that have potential. I'm just going through a list, maybe Newland, Finolex Cables, Intellilect, as well as BEML. Run us through the list, and if you could speak a couple of lines on a couple of them or on all of them.
So essentially, first of all, I think so you have to look at the backdrop of small cap performance in this environment. If you look at the Nifty small cap index over a 5-year period, returns have been, fairly dismal. Nifty returns have been closer to 11% CAGR. Nifty small cap has just compounded at 3% CAGR. So I think so last year also we saw a very large divergence between small cap performance. So it has been a washout environment for small caps. There are at least, 800 stocks which have corrected by more than 50% in last 2 years from the peak prices. Secondly, what we find is that, the total addressable market for a lot of small cap companies is expanding at a very, very fast pace. And, this includes companies like BEML. Obviously it is up for strategic divestment. But if you look at only the defense piece of BEML today, it is a 5,000 odd crore revenue company. Defense order book could be, as high as 15 to 20,000 crore over a 3 to 5 year period. So just imagine the kind of opportunity that one segment offers for BEML. Similarly, if you look at, Tejas Network or Intellect Design Arena, what you'll find is that the TAM for most of these companies is expanding rapidly because either they are gaining market share locally or they are gaining market share, globally. So if you look at a company like Tejas Networks, obviously the order book has doubled over last 1 year, from 900 odd crores to 1932 crores to be very precise. If you look at the BSNL tender, that is going to be a massive tender win for the company. It is going to be a 8 to 10,000 crore tender win. More importantly, this gives enough credibility for Tejas to be a global player, over a period of time. So what we are witnessing in the small cap is that, if you look at the past 10 years, the mortality rate of small graduating to mid and mid graduating to large has not really panned out. But what we see here is that, there is enough visibility in revenue. And some of these shifts are structural in the sense that, these companies have competency. So what we truly believe is that, this gives us a very good opportunity because of the market turmoil in terms of getting into companies at a very reasonable valuation level. So if you look at a Newland Labs, for example, the stock made a low of 250 rupees, rallied to 2850. It was the best performing pharma stock. Again, market gave an opportunity. The stock corrected to 1050. And obviously, the underlying business models are changing in the sense that, for a company like Newland Labs, what you'll find is that the high margin business, structurally, they reported a higher gross margin than DVs in the last quarter, and it has never happened in the company's history. So what we essentially see is that, there is going to be enough room for these companies to generate a decent returns over a 3-5 year period.
Okay, so those are some of the names that you like. I just want to go back to financials, Aditya. Hi, afternoon, Surabhi here. Because we've seen some very divergent trends and a few outliers. I don't know if you've had a look at Federal Bank of late, but I think the reason the market is so disappointed is that this is a quarter where almost all lenders, even mid-sized ones, look at Chola the other day. I mean, people have reported blowout growth of the book on deposits, on advances, sky-high margins. I mean, we're talking 5, 6, 7% margins. But here is a bank which has reported a compression in NIMs, a compression in net interest income. And I think that's something the markets are finding hard to digest. Any thoughts on Federal or otherwise any other mid-cap bank or NBFC sort of stock that interests you?
So we have some exposure in CSB and Equitas, and our basic premise in terms of small cap, favoring small cap banks has been that there is a divergence between the valuation of these banks. We have focused on categories wherein, you can have a price to book mismatch, so if you look at these companies, and we have used, 2% as a filter of ROA, whether, Equitas can graduate from becoming a 1.5% ROA to a 2% ROA bank. I think so they are just there. If you look at a CSB, obviously they are heavily skewed towards gold loan. But what we also believe as a house is that, the best of credit cost is, sort of behind you. So if you have to normalize the credit cost, and it is the exact opposite, you cannot have this kind of credit cost going into a lending business from a 2 to 3 year perspective. I think so. The credit cost for most of the sector is at the lowest point in last 40 years. So our view is that this is a business which will report elevated credit cost. Obviously, there is a significant element of counter-cyclical buffer that ICICI Bank has provisioned for, or the larger banks have provisioned for. But clearly, one would have to focus on credit cost and the provisioning numbers. So we are, slightly neutral to underweight on banks. Equitas and CSB have rallied by 60, 70% in a 6 months period. So what we believe is that, NPAs can only shoot up from here.
Aditya, out of time. Thank you very much for throwing your insights on individual names, the financial pack as well. Back to the markets, we're pretty much at the low point of the day, and now names like Kotak Mahindra Bank, State Bank of India have dipped to the day's low. Mitesh Thakkar is here with us for a few BTST trades. Mitesh?
I have one buy and one sell. On the BTST side is Maruti. I think that's the stock which is holding out nicely in this entire fall, and overall setup is quite positive here. I would recommend a BTST here with a stop just below 8,900 and a target of 8,950. And National Aluminum or NALCO, that's STBT. Keep a stop at about levels of 81 and look for targets of around 78.
All right, got that, Mitesh. Thanks very much for the calls. Let's move on to an interesting story now that impacts perhaps all of us in some ways. This is coming in from the aviation sector. Airfares have surged significantly in the last 2 to 3 days.